All right, the million-dollar question. Should you buy real estate right now, or should you keep waiting and see if the bottom comes in? I'm that Agent Kelly. I talk about real estate, I talk about real estate investing, and I talk about my local market of Vancouver, BC. So if you get any value or entertainment from these videos, all I ask is that you thumbs up and subscribe. Let's get into this video. All right, first off, let's just talk about the fundamentals of market sentiment and how that works. I'm a firm believer of being a contrarian, and the reason for that is because this is what pretty much every successful stock market investor preaches. Warren Buffett, be greedy when others are fearful, and be fearful when others are greedy. I mean, if you just look at the statistics, 90% of people lose money in the stock market. The reason why that happens is because they follow the current narrative, the current market sentiment, whatever it is. Buy now, you're going to be a millionaire, or sell, everything's going to zero. Then they end up buying high, getting scared, and selling low. Currently, right now in the market, everybody is on the same page that the market is going to crash. And typically, once everybody is in agreement that one particular thing is going to happen, it pretty much never comes true, because if the majority of people always knew what was going to happen, then we would all be millionaires, right? So if you just look at the market sentiment and you look at the fundamentals of what to do with that information on market sentiment, it would tell you right now everybody's fearful and you should be greedy. You almost have to go against your gut feeling. And for me personally, I know some of the best investments that I've ever made are ones where I thought I was going to lose a lot of money, and all the investments that I thought were going to do very, very well ended up losing money on. So just look at market sentiment right now. Typically, you want to be doing the opposite of whatever the majority of people think, and right now people are shit scared of buying real estate. Inventory right now is still extremely low. In the Real Estate Board of Greater Vancouver, we're at about 10,000 listings. And historically, we need about 18,000 listings to cause sustained downward pressure on prices. So we're about 80% lower in inventory than what has historically been needed to continuously push down prices over the long term. And if we talk about future inventory, unless we see a massive wave of forced selling at some point, which is possible, but unless we see that, the cavalry is not on its way. Sellers do not like these prices. They aren't listing their homes. They're terminating listings. They're taking listings off the market. They're not relisting them. And currently right now, there are 80 some odd development projects on hold in the Real Estate Board of Greater Vancouver. That is going to cause supply constraints a year and a half, 2 years from now, when all of these homes should have been finished being built. Renters should have been moving into them. People should have been occupying them, or people should have been selling them back on the market. None of that inventory is going to be here in a year and a half, 2 years from now. So the inventory situation, unless we see a catastrophe, will probably get worse than it is right now. Another thing to think about is as we get closer to the bottom, we're kind of seeing this already, inventory is starting to roll over in pretty much every area of the Lower Mainland. As we get closer to the bottom, inventory starts to dry up. So you typically want to be buying before you hit the bottom, because if you're buying at the bottom, most of the time, all of the quality inventory isn't available at the bottom. Inventory will be lowest at the bottom, and that's what sparks the reversal for prices to go up again, because demand catches up to the supply at that point, right? So sure, you could wait to the bottom and get the best price possible, but there may not be any quality real estate left, or something you actually want to buy left once we hit the bottom. So typically, ideally, in an ideal world, you want to be buying within 10% of the bottom. I personally think that's where we are right now. I could be completely wrong about it, but you just got to think that there's more variables in real estate than just what's the price I'm paying. It's also what am I getting and where am I getting it? Because you could buy, 1970s apartment with no in-suite laundry at the bottom of the market, but are you really going to see a good return on that investment going forward? Immigration. As you guys have heard, Canada's immigration is the highest that it has ever been. They are giving over 500,000 people permanent residency every single year for the next 5 years or something like that. I think it's about 150,000 of those people are brand new to Canada. So actually immigrating here British Columbia should see about 60,000 new people every year, and with all these developments being on hold, with inventory being so low, we're barely building anything as it is. That should set a floor under prices eventually, regardless of what interest rates are doing, regardless of what the economy is doing. People need somewhere to live, and if they can't find anything to buy, they're just going to be forced to buy or rent something, and that'll either push up housing prices or push up rental prices. Even if it pushes up rental prices, that will make investing in real estate more attractive because the returns for the landlord will be more attractive, and then that will cause excess demand in the real estate market regardless. So any way you look at it, people moving here is going to spike demand in the housing market. Rates, in my opinion, are close to peaking, if not already. I believe they're probably within 1%. We're already 3.5% higher than we were at the bottom of COVID. So, I mean, typically if you're buying close to the peak of interest rates, they really only have anywhere to, the only direction they can go is down, right? Yeah, your mortgage sucks, it's very expensive, but if you wait for rates to come down, that's too late. People are already jumping back in the market. You're in multiple offers. Prices have already come back up. You kind of want to be getting in before everybody thinks it's a good idea to buy. And I think buying when rates are high is an optimal situation to be buying in because demand is extremely low. Most of the buyer pool has been knocked out of the equation. And also, rates are more than likely going to drop back down at some point. You could always refinance if you wanted to and drop your mortgage payment. So right now, where are the opportunities? I personally think pre-sale purchases are probably the best and safest opportunity in the market right now. If you buy a pre-sale that's completing 2 to 4 years from now, it's likely, like in my opinion, worst case scenario, rates will be the exact same. More likely they'll be lower in 2 to 4 years from now, and rents will probably be higher. So instead of buying an investment condo, putting a tenant in there and losing $700 a month after all expenses and the rent, and not being able to evict that tenant or refinance your loan or anything, it might be advantageous to buy a pre-sale where you don't have to make any mortgage payments or anything or find a tenant 2 to 4 years from now when your cash flow numbers look a little bit better. And the capital upfront for pre-sales is much less, typically a 10 to 15% deposit, opposed to coming 20% out of pocket right now. So that's personally where I would be looking to buy if I was looking to buy some investment real estate right now. If you're looking to buy something to live in, detached homes have been hammered extremely hard, and that's where I would be looking. So that's it for this video, guys. I hope you got some value out of this. I'm that Agent Kelly. Please thumbs up and subscribe, and we will see you on the next one.